We are in the era of figuring out what's going to survive. Okay.
Which was that we realized that this was a long duration asset and need to have a longer time horizon than was traditionally macro.
Yeah.
And we both had to learn that. You have to learn it. It's hard, but you learn it, and you learn as you're doing now. Is if you've got a long duration, you should be buying in the sell-offs and not selling.
So now let's take a look. So that way we have real institutional analysis. Alrighty, so I'm going to start off here in today's video breakdown. We're going to first jump into mindset because I want to set the tone for today's video. And anybody watching this as a recording, I want to really just convey the message and thoroughness of understanding that your mindset is what's really going to take you to new levels of existence. If your mindset isn't right, then nothing else in life will fall positively in line because your mindset being positive creates thoughts. Those thoughts can then be turned into a tangible reality or a physical reality for yourself. And it all just again stems from mindset, right? Your thought process. Then we'll jump into how we as a community had access to understanding the parameters of the market dynamics way before the retail crowd. How maybe it's not that we were able to gauge how low this market was going to drop, but we definitely understood where it could have potentially dropped from, where it did drop from, and gave accurate analysis, myself and Scalper, along the entire way to the T of a degree. And I'm going to show you guys those tools, those mechanics, especially if you're new and you've only been in this community for a month. I'm going to show you guys the things that we have access to in this community that nobody else, literally, I'm not joking, you cannot find another retail community that has access to these tools. Then we'll get into a little bit, like I said, of the XRP analysis. I'm just going to kind of briefly go over the order flow on the daily, show you guys where buyers were getting trapped at, where sellers threw up passive sell volume, then became aggressive, breaking buyers and pushing price to the lows that we've recently seen, and kind of where we are at now on the volume landscape, what we would like to see, where we would like to see buyers become aggressive, so on and so forth. We'll get into that as well. And then I will end it talking about why DeFi is a good option under the current market conditions that we're experiencing in, especially for investors. And then end it with the fundamental landscape, which we'll touch lightly on just to prep for this upcoming week. And then tomorrow's Zoom call, we'll get a little bit more nitty gritty into detail with price projections, sentiment, and take a look at the overall total cryptocurrency market cap tomorrow during the bank holiday. All right. So starting off with this, setting the tone, I want to read this. This is the message that I relayed to you guys yesterday. As we head into the weekend, I want to take a second to remind you all of something. Sorry, let me reread that. That's a run-on sentence. As we head into the weekend, I want to take a second to remind you of something real. Your future isn't built in one big moment. It's built in the small intentional actions that you repeat day after day. The habits that you keep when no one's watching are the ones that shape everything. If your dreams are big, your habits have to match that energy. That means being honest with yourself, cutting the excuses, and choosing discipline over mood. That is extreme. That sentence right there is so important considering what we are seeing right now in the market. Like, for example, this shit, you guys, I'm telling you, even just seeing these thumbnails is an algorithm playing against your mentality. Block it out. Focus on knowledge in these times. Read documents that the researchers are sharing. Watch the panel discussions that the researchers are sharing. Study institutional order flow in the Delta education section instead of feeding into this public bullshit that's happening right now in the market. Okay, I'm not saying you guys are. I'm just giving you guys warnings. You're going to see red. You're going to see big eyes. You're going to see open mouths. You're going to see big vocabulary words. It is all to fuck you. Okay, and when you understand that, and you understand what part of you or what community you're a part of, the mindset, the exposure, the portfolio, it changes. Okay. Like just for example, today, and I'm not saying that the pain is over, but just like today, right? Because we execute on strategy, we execute on clear, concise, mentalities with precision that is unmatched. The $10,000 that I told you guys that I was putting into the market just the other day, once my parameters to DCA into the market were met, albeit at a very existential level, who knew that the market was going to drop $800 billion dollars? Nobody did, right? Nobody did. But we had areas of interest. We did analysis. We made sure that we were prepared for this moment, right? Teaching you guys to stack stable coins, teaching you guys to preserve cash. Why? Because cash gives you the ability to buy assets that appreciate in value long term, right? So this 10 grand that I put into the market, it's not to flex, it's just to show that when you follow a strategy, you win. You're not panicking, you're not freaking out, you're not making outrageous claims and freaking everybody else out because you're focused. This is how you win, okay? Back to what I was saying. Some days you'll feel unstoppable. Let's bring it back to reality because other days you won't feel like doing anything. I've told you guys multiple times when you're an entrepreneur, when you're trying to become successful, there's going to be days where you don't feel like doing what it's going to take to become a successful person. That's reality. Some days I'm like, fuck this. I don't want to get out of bed. I don't want to do my laundry. I don't want to go sit at the charts for an hour to trade, right? Those days happen. But that's where most people fall off. That's also where the separation happens. The ability to stick to your plan, even when your emotions try to pull you off course. That is a skill that most people underestimate. And when things don't go the way that you expect, don't label them as failure. See it for what it is. It is information. It is redirection. It is realization. Every setback is a stepping stone if you choose to learn from it instead of hiding from it. Stop waiting for the perfect time to start doing something productive. It does not exist. Clarity comes through movement. You can't learn to drive in park. Even 15 to 20 minutes of focus every single day compounds massively over a year. Think about yourself. You want to learn a new language. You want to learn how to trade. You want to learn how to invest in DeFi. You want to learn how to work out better. You want to learn how to eat healthy. Participate in that category of whatever it is you're trying to do for just 20 minutes a day. 20 minutes, that's all it takes. And you do that for 365 days, and you're 365 almost percent, if that's your 1% per day, above the rest of the population, because the rest of the population isn't doing that. They're distracted, they're manipulated, their brains are being fed misinformation and being diluted, filled with hopium and all these things that don't fucking matter. Okay? So I encourage you guys this weekend to take time to realign, to reflect, to refocus, to move with intention. Whether it's your mindset, your health, your craft, your goals, lean in. Start where you are and give it everything that you've got. Remember that the only real limits are the ones that you accept in your mind. That is extremely important. So, again, reminding you guys to not waste the weekend. Why am I saying all this stuff to you guys? Because we are at a moment in time where things like this, I'm going to let you listen to it. This is insane. It's embarrassing. It's embarrassing that this is what attracts the algorithm. And that is where we are different. And I'm going to show you guys that, right? You have to be different. You have to be the separation between the ignorant and the few enlightened individuals that are going to wiggle their way up to the top of the totem pole to then turn around and help these people become enlightened as well. Because as a civilization, we're all going to only constantly continue with failure lingering in the background unless we better ourselves to better the population, to better the all. That is the goal, right? If that is not your goal, get off this Zoom call. If you're selfish and you just want to become financially free to benefit nobody but yourself, get off of this Zoom call. We don't need you here because that's not going to work. If you just want to disappear into the woods and become a hermit and never come out and see civilization again, that is not a reality. Not in this day and age that we're moving into. Maybe for a couple of months you can disappear. There's nothing wrong with that. Maybe for a year you can disappear. But if your end goal is just to disappear for forever and never contribute to society, you're not living. You're not here for humanity. You're here for yourself. And that is a truth. It's a realization that a lot of us have to come to. Why? Because we want isolation. because people like this linger around us all day, every day. But you have to ask yourself a question. Maybe it is isolation that you want right now. You want to live in the woods, grow a fat beard out, drink beers all day, and live off the earth. But maybe it's because you've been fed to run away from people who are ignorant all your life because people have ignored you, ignored what you said, looked at you crazy. You've never been around like-minded people that want to build, that want to help you grow. You've never been in a mansion with 20 people that all have the same mindset that motivate you to be better, to be different, to be an enlightened person. And I can tell you the truth that I have. And even though, just like you, some days I want to be isolated in the woods with nobody around me, those days, it's okay. But you feel so powerful when you're around a group of people that are like-minded, that have the same open interest to benefit the all. And that is such a better end goal than being isolated and not helping anybody all throughout your life. I promise you. So let's change our mindset. Let's make sure that we're ignoring stuff like this because I'm not joking. It is an algorithmic attack. Think about it. Algorithms control our lives, and they know humans are in a moment of misalignment and misfocus. And so they're going to pump this stuff out to you guys for the next however long it takes.
Nigga, $250 billion wiped out of the crypto market today. 1.2 trillion wiped out of the stock market today. 3 fucking trillion in 60 minutes, bro. I lost over $50,000 from fucking market manipulation. There was nothing you could have possibly done. Solana down 40% in a fucking day, bro. There was nothing nobody could have possibly done. The shit was going down at an extraordinary rate. Donald Trump bringing back tariffs because the nigga didn't win the Nobel Peace Prize in China. 100% tariffs on China starting on November 1st. There was no skill, there was no analysis that you could have possibly done to predict that this was going to happen. I'm going to be completely honest, my nigga. I am completely done from this crypto shit, my nigga. I will never place another trade in my life. Broke my fucking phone out of just pure anger, threw my shit at a wall after seeing that I lost 20,000 in one trade, 20,000 in another trade, and then 10,000 on another trade.
Now, I want to highlight something for you all. Who was here with me when I lost $500,000 in real time, called you guys the moment after and exposed the truth to you guys that I had lost $500,000 fucking dollars? I know a lot of you guys were there. Did you see me break anything? Did you see me slam my phone? Did you see me misalign my direction and my momentum and say that I was going to quit and never come back to the markets and never experience these failures again or trials and tribulations again or anything of that matter? And I'm not comparing myself. I'm just showing you guys the level of maturity that you also can achieve and trying to get you guys to see that most people should never be involved in these markets in the first place because they never worked on themselves. This young gentleman here is a spitting image of that. Why people should not get involved in these markets because they are not mentally prepared for what is coming down the pipeline, and that is the unknown, right? You need to mentally prepare yourself for the unknown. In the military, that's one thing that we mastered. We mastered reacting to unknown conditions, having the ability to adapt and recalibrate. Be in control of your environment at all time through your emotional control. Sometimes you cannot control your physical environment, but you can always control your mental environment, as long as you obviously, of course, have no mental health conditions that deteriorate that fact or that statement, right? Another thing that this gentleman said is that there was nobody that could have predicted that this was to happen. Another incorrect statement. In this community, we have timestamps for everything and physical proof that we are one of the only communities in the world with access to these institutional trading tools that allow us to read institutional volume and order flow accurately in real time, not as a lagging indicator like most retail-based analytic tools available on the market. Let me show you. So, Institutional Scalper reminded us that during high periods of volatility, the market often enters a phase of rebalancing, a process where institutions allow price to accumulate or distribute volume before establishing new directional intent. These moments, often marked by sharp rug pulls or sudden liquidity sweeps, effectively reset the order book. All positions are liquidated, stop orders are triggered, and new institutional orders begin to form beneath the surface. So he reminded us that newly formed deltas will be updated. And if you take a look at when he updated these, look at this accuracy, everybody. Okay. This is a screenshot from in the community months before the sell off actually took place, where we could see institutional sell volume sitting at the $4.23 trillion institutional sell delta. The screenshot's right here to prove it. If you go and you look in the Discord and you see where the market sold off from, it sold off at exactly $4.23 trillion, where institutional scalper had given everybody access to deltas months in advance. Now, albeit we did not know that once price came up, if it was going to allow for buyers to become aggressive, push through, retest as support, and break higher. The fundamentals, the momentum, the volume, all of that would have needed to collaborate at that moment in time. But mind you, we did have access to where the market could possibly sell off from and where it could possibly pull back to way before the retail crowd ever did. You can see that we dropped right into $3.28 trillion, which was the first buy delta. And now we have rekindled some losses from there. All right. So anybody telling anybody on the internet that there isn't a community or people out there that have access to this information, stop following them. It is a distraction. They are misaligned and their mentality could just not handle this type of information. Right? They're not prepared internally for this type of education. And it's a sad truth, but it's a truth nonetheless that we have to live with being in this community. If we come over here, you guys did this, not me. If you go back and you watch this Zoom call as a community, we together collaborated and we said when price was at $4.23 trillion, this was October 6, 2025, our private Zoom call. We typed out all these fundamental drivers and we specifically said here, buyers lose stamina, right? Sellers trap buyers at highs and start to become aggressive, pushing price back below the delta, while at the same time, we start to see a shift in fundamental headlines. So we see a hawkish tone from Fed speakers or any shift away from rate cut expectations in the FOMC minutes and meetings or Powell's speech this week. If we see any stronger than expected economic or inflation data that reduces the likelihood of near-term rate cuts. If we see any Bank of Japan policy surprise, meaning the market starts to pace in or price in a faster or larger than expected rate hike. If we see any breakdown in the Gaza ceasefire talks, so any renewed escalation that brings back the geopolitical risk premium. And if we see any prolonged US government shutdown or any type of data releases that create any type of uncertainty or spark investor, or dampen investor confidence that push back on this rate cut narrative, while at the same time, we see buyers trapping or sellers trapping buyers and becoming aggressive, pushing price back below the delta, then we know the likelihood is not that we're going to break higher into new territory to respect a sell delta, but instead we're likely to start making our way back down in the form of a pullback to see if buyers can then come and defend at the buy delta. So if we see this type of rhetoric this week in the market, so for anybody to say publicly that you can't gauge market pullbacks correctly and accurately, again, they're lying to you, right? We didn't have a crystal ball at this moment in time back on October 6th, but we knew the analysis and how it would align with price action, right? So I'm just again trying to show you guys that you can be different. You don't have to be like the retail crowd who is dazed, who is confused right now, who is completely obliterated by the current market conditions, when in reality, this whole entire thing should have been seen as an opportunity, a learning lesson if you lost money, right? There's two sides of everything in life, duality, right? Study it. It's very important. It is the epicenter of the universe and creation itself. 1 and 2. Here's the bear scenario that we put out publicly to everybody. Now rolling over into our XRP analysis really fast. Taking a look at the institutional order flow and what happened. You might not understand this, so bear with me as I go over it, where we take a look at where buyers were trapped at highs, by passive sellers. Then sellers became aggressive, putting up defense and then becoming offensive, doing it again and again and again until pushing price all the way down into a buy base, breaking that buy base, trapping buyers again, sellers becoming aggressive, having a market sell off, and then leading up to where we're currently sitting at now and what we would ideally like to see. We'll get into that. But if we take a look back at the analysis, albeit I didn't know that the market was going to drop all the way into $1.19 like it did, I definitely called for deeper retracements under conditions where we saw buyers trapped at highs, sellers become aggressive, and fail to break aggressively above institutional resistance. So anybody to say that nobody can predict this is, again, they don't have the access to the information. So if you guys have ever heard us mention, I know if it was either Ivory Python, D'Angelo, somebody on this call, we've talked about this, the allegory of the cave, Plato's allegory of the cave, right? You know only what you have been fed to believe until shown otherwise. And usually when you're shown otherwise, you're a skeptic because all your life you've been fed to believe something, when in reality, well, reality is much greater than what most people can even fathom, right? So it's hard for people to believe that there are mechanics and metrics and tools that exist like this because they've never peeled back the curtains and done the inner work to access it. So the universe will not give you institutional deltas. The universe will not allow you to meet institutional scalper or myself if you've never done the inner work to unlock your brain to watch a CYPRX video to be like, this guy maybe might know some shit that I don't know, so let me tap in, right? Most people won't do that inner work, so they will never discover our community. You guys have done that inner work. So use what we have to your advantage. It's going to take you some time to grasp the concepts. Might take you a year, might take you 3 years. But once you grasp them, you're unstoppable compared to the rest of the crowd. So I said here, key levels to watch, especially if we don't see a bullish break above specific areas like $2.82, and we see buyers trapped at highs, we likely see price back down at $2.42. We got that, interestingly enough, that's actually where price action now is starting to build another buy base around, it seems like, is that $2.42 delta that I had originally expressed price action coming down into. However, on certain exchanges, we dropped down into like $1.56, others $1.19. The lowest in terms of the order volume, the order flow charts that I've seen is $1.19. Let's just briefly go over this. All right. So taking a look at this price action, these are the order flow charts. I'm not going to break down in too much detail. I'm just going to talk through them because this is not going to be an entire order flow lesson. Long story short, and we had come up into roughly about $3.11 where an institutional sell delta lies. If you go and you take a look, one of the institutional sell deltas that we have was $3.11. So when price came up into $3.11, you can see here we had buyers trapped at highs, sellers threw up passive sell volume and then became aggressive, and buyers tried to trap sellers, pushing price action back above the recent high or the institutional sell delta at $3.11. They failed to become aggressive, as you can see here in these three candlesticks. There's no aggressive buy volume pushing price up higher with momentum, and instead, sellers throw up passive sell volume, trapping buyers at highs again, and then they start to become aggressive. If we fast forward to days later, this was, I believe, the 7th of October, you see again buyers getting trapped at highs with passive sell volume, turning into aggressive sell volume, and breaking a buy base. This same exact pattern continues all the way down until price reaches the buy base, where we can see a buy imbalance in historical price. This is back from August. Once we got back to that buy base, buyers tried to make an attempt to defend. They failed miserably. At the same exact time, we had all of these risk-off headlines Sellers threw up passive sell volume, following by offense, throwing up aggressive sell volume, and were able to break that buy base with huge momentum and volume. Now, fast forward to where we are at today. Okay, let me see if I have a better screenshot so that way you guys can see this a little bit better. Because this is going to go over what we need to see now moving forward. This is a lot better. Let's screenshot this and bring it over to the charts. So now let's take a look so that way we have real institutional analysis on what we want to see if this current buy momentum that we're seeing, because buyers are trapping sellers right now at lows. But the question is can they continue to do this and then become aggressive above where previous aggressive sellers existed? Okay, that's the question that we need to confirm right now throughout the remainder of this week on regards to, is this going to be a recovery or a dead cat bounce and turn into more sell pressure where sellers are trapping buyers at highs again and pushing price back down to lows. So if we look at the current price action, all right, this is that sell delta that we had. You can see that buyers have trapped sellers. And this is the most recent move here where we can see yet again buyers throwing up a passive buy wall, trapping sellers, and starting to push price action up. And we've had a medium buyer here. I'd say a medium-sized buyer. I wouldn't say this is too aggressive. This is a medium-sized buyer able to break this recent resistance. So if we want to see this price action continue and turn into a full-blown recovery, what you'll notice here is that roughly at about $2.72, which also aligns with an institutional delta around $2.75, there is aggressive sell volume here. And so if we want to see this turn into an absolute full-blown recovery, something like this, when we come up into this $2.72 range, there's going to be a battle. You're going to see passive sellers attempt to trap buyers at highs to try to defend their previous aggressive positions. And the question after that will be, do sellers become aggressive, pushing price action back down, or do buyers become aggressive, breaking through the previous sell wall at $2.72, then passively trapping sellers at lows, and then becoming aggressive, pushing price higher, breaking the previous sell resistance? So we can see right now with these institutional tools what level we need to break back above in order to confirm that this is not going to be some, once we get up into $2.72, sellers just becoming aggressive again and pushing price action back down into lows. So right now, $2.72 is one of the most important levels to watch on whether or not we're going to see something like this. Buyers getting trapped at highs, sellers defending, throwing up passive sell walls, trapping buyers, then becoming aggressive and pushing price action back to the downside. Or if at $2.72, we're going to see buyers, let me change the colors for you guys. Or if we see buyers start to follow support and become aggressive above these institutional deltas where we're currently trading at now at about $2.48 to $2.50, pushing up into the $2.72 range, testing the sell volume, sellers trying to throw passive sell volume, but buyers trapping sellers, throwing up passive buy volume, and then following through with offense with aggressive buy volume, breaking the 72-cent threshold, retesting this 275 buy delta, and pushing price higher. This is the question right now that remains. Right? So I know a lot of that might have been confusing to you guys, but bottom line is what I'm just trying to show you all is that we have institutional grade tools in this community that allow us to see where buy and sell volume exists, so that way we can gauge once price action comes into those levels, what needs to happen around these key areas of interest in order to dictate where the market could most likely move next. Right? So this coming week, $2.72 will be a very key area of importance if you trade XRP. If we cannot break $2.72 and we start to see sellers throw up a passive sell wall, trapping buyers, then becoming aggressive and pushing price action down, I will definitely be reconsidering, especially because exchanges will likely be able to, hopefully, as long as there's no crazy ass candlestick this week and we just see a trickle down effect back down into deltas so that buyers can try to defend again. I'm definitely going to make an attempt to try to get some good dollar cost average levels at lower levels if we can get that and we can get accurate price data on exchanges. Okay. But that is again yet to be seen. So we just need to wait patiently for that. I'll continue to update you guys on XRP analysis this week. Scalper has been doing his job in the XRP deltas. If you guys are in those channels, paying attention to details, let's move forward. All right. So now let's get into talking about why having cash is good, because it gives you buying power in moments like the ones that we've recently seen. And that this whole ideology that myself and Kev and Aqua have been trying to teach you guys with DeFi. So rolling over here to this post, which is going to lead us into this discussion. I said to you guys, this is back from a couple days ago. Today was a wake-up call. Crypto just erased over $800 billion in a single day and then bounced back $500 billion. However, that entire time, most exchanges were completely shut down. Price data was being fed inaccurately. So, for example, I showed everybody in the community that if you were to go buy Aptos, as an example, on Coinbase, they were charging people $4.11 for one Aptos token, but Aptos on TradingView and on decentralized exchanges or decentralized platforms was trading at like sub a dollar. Okay. Think about how many people lack the skill set to operate on a DEX, to make a swap or a trade on a DEX. Mind you, that there's 600 million people in crypto and only 8 million people in DeFi. Me and Aqua have been screaming this at the top of our lungs. DeFi, 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 right? These centralized intermediaries locked people out. They seized trading. Okay. So exactly what I've been trying to teach you guys has now played out in real time. So I said, let's be honest. The odds that the average person sold right at the top are slim to none. Most were not glued to their screens with limit orders waiting to catch the peak. So the question becomes, what's the smartest strategy to hedge against volatility while actually growing your position size? Mind you, all of us most likely have a long-term perspective in crypto. If you don't, then you need to consider taking on day trading skills, because if you're here for a quick flip, buying $100 here and $1,000 here and maybe even $10,000 here into crypto is not going to make you financially free. You're an investor if you're doing that, right? The answer to this is DeFi. While the market was aggressively selling off, those who had their assets working for them earning yield 24/7 didn't just sit idle. They claimed rewards, they recompounded into the dip, and they came out most likely with more crypto than they had yesterday. They turned volatility into opportunity. Mind you, there was some people in this community that voiced that they got liquidated in certain positions, which again should all be viewed as a learning lesson, right? A rekindling, a repositioning of maybe your risk exposure, what it is that you're doing with your own strategies. All of these things are just learning lessons. Now, fast forward a few hours and the market has already bounced back $516 billion. Realistically, how many people caught the exact bottom? Very few. Okay, very few were able to enter in at the exact bottom when the market bounced back. This is exactly why long-term positions in quality blue chip assets while generating passive income through DeFi is such a game changer. You're not relying on perfect entries or exits. You are letting time and yield work in your favor. Your strategy should not be about timing the market. It should be about positioning yourself so the market works for you even when you are not at your screen. Today was not a disaster. It was a beautiful lesson in disguise. Start building positions that earn for you all day, every day. That is how real wealth compounds in this space. And so you can see my exact thesis. How many people were able to gauge this exact top? Well, we've already seen not a lot of people, y'all. Not a lot of people. Biggest liquidation event in crypto history, which means most people involved in leverage trading misgauged the top inaccurately, which just again proves what I'm saying. Most people are not going to be able to do this. Not now, not in the future, because they lack the skill set. They're not here in this community doing what we're doing on a daily basis to do this, right? They don't have access to the institutional tools that you guys have access to do this. So likelihood of them doing this is slim to none, right? Then where the market bottomed out, most people probably did not gauge that either, because if anybody did sell up here, they were way too fearful when the market was down here at $3.28 trillion to get back in. Why? Because greed works in both directions. They most likely thought that when price was at $3.28 trillion, the market was going to go lower. And so what did they not do with those profits? Put them back into the market. So they missed the bottom. So even if they did gauge the top properly, they probably missed the bottom. And now they're probably putting money into the market now that the market is rekindled $500 billion. And what if this upcoming week price drops straight back down into $3.28 trillion to retest the buy deltas? Well, all those people that bought midway through this pullback are going to be mentally fucked because the money that they made is just going to go back to where it was. You see what I'm saying? It's a mind game. It's all for you to get wrecked. The markets are literally built for you to not make money. They're there for you to make money, but they're designed for you to not make money. That is write that shit down, y'all. Write down what I just said. The markets are there for you to make money, but they are designed to take your money, to not let you make money. DeFi changes that. DeFi puts the power of the banks back in the hands of the people. Imagine if you had a $10 million crypto portfolio, a $10 million crypto portfolio in yield, generating you, I don't know, let's say it was an XLR at 7.7%. Let's just say, hypothetically speaking. And that $10 million got halved because of this recent pullback. That's still $5 million actively earning 5 or 7.2%, whatever yield XLR is earning right now. Even though your portfolio got cut in half by $5 million, earning yield on $5 million at 7.2% is still a lot of fucking money. Now, you guys, again, might not have that much money earning that much yield. I'm just trying to get you guys to see that people that are earning yield all day, every day, are winning over the people that thought that they could time this shit. And so think about that. While we're at $3.67 trillion compared to the volatility that is coming, this is nothing. People that cannot mentally handle what just happened, these $1 trillion price swings, they are not mentally prepared for what is coming. Because if you go look at the stock market lost $1.6 or $1.7 trillion. And the stock market is in the hundreds of trillions of dollars. And that's what's coming for crypto. So these types of swings, most likely, albeit in the future, they're going to seem a lot less aggressive in terms of percentages, where a $1 trillion loss is not 70% of the total cryptocurrency market cap. A $1 trillion loss in the future might only be a 10% drawdown. Right? See what I'm saying? So you have to mentally prepare yourself for these things now, because who knows what the future is going to look like? How can you survive for that future? Stop trying to time stuff if you're not or don't have the capabilities to time stuff, and just buckle up your seatbelt. Understand that this is a roller coaster, and on this roller coaster, you could be collecting chips the entire fucking time while you're riding the roller coaster till the ride's over. The ride's over whenever you meet your financial goals in the future. It's not, the ride's not over now. All these people keep thinking that the ride's over now, and they are so wrong. Right? This leads me to what this gentleman here said. Verbatim. Tether, co-founder, we tried to warn everybody, and he was right about this. He literally said, warns of a 75% crash despite the bullish outlook. So this Tether co-founder, he called this out because this was 2 weeks ago. So he accurately called out the 75% crash, and he was right.
I would not pay that much attention. If I had to ride through a downturn for a couple of years, I'd say whatever. And the reason is this: the greatest risk when you are involved in a investment that has a very likely a very long trajectory, but that's got volatility along the way. The greatest risk you have is that you exit and you never get back in. And that risk is so great, in my experience. I've never exited. I just have held my crypto. Could I have done amazing if I had sold at the lows and, or sold at the highs, bought back at the lows? Of course, but I never knew what the lows were and I never knew what the highs were. So when people talk to me, as they do all the time, and they say, it gets kind of annoying sometimes too. Oh, Bitcoin dropped 10, 15%. Should I sell? It's like, well, yes, if you literally are going to miss your rent because you needed that money, but you shouldn't have had that in there if you were in that situation. But no, you should not if it's just money that's being put in the speculative bucket. So now let's say you're not in that situation.
Right? So very simple in layman's terms. And me and Akko were trying to show people this when it dropped weeks ago. Actually, shout out to the CYPRX researchers. They showed us, so we just conveyed the information to you guys. And so we were right. We fast forward to today, and this is right. This is accurate. This is exactly what we're trying to warn people about in this community, that a pullback is likely to happen in the future. Who knows when it's going to be? We have metrics to gauge where it could possibly come from, especially if we see certain things happen at these specific levels that we have access to. But who really knows what time it's going to happen, where you're going to be at your computer or not, at your desk, at your job, whatever, and what's going to happen for centralized exchanges? Like we said, a lot of people were not, if they did sell, able to get back in because everything shut the fuck down. And if you were able to get back in, you probably didn't buy at an accurate price unless you were, unless you had a whole entire portfolio in stablecoins, able to operate on DeFi exchanges, which is exactly why, again, I've been trying to teach you guys to build a stablecoin portfolio that's earning yield for moments like this, right? So now moving on, to just get into a little bit of that. Okay, why it's important having cash in times of volatility, because cash gives you buying power. And this is a video breakdown from one of my favorite macro investors. I mean, in terms of podcast wise, like I'm always listening to Rob Paul. I'm not just like sitting there like he's like my favorite. Oh my gosh, I idolize him. But like if I'm gonna listen to something in the background that's more on the entertaining side of things, um, and I don't want to bore myself to death, then I usually go to like, Rob Paul. I'll go to a couple of other like older gentlemen that have actual valid credentials and investing experience, and he's one of the people I listen to. And this is a podcast from, I think it is either 2023 or maybe 2024, or could it even been from the beginning of this year? It was a while ago. And this strategy just goes hand in hand, that you should just be buying into the blood, not fearful when the markets do things like this, and instead use your cash reserves that hopefully you've been earning on yield the whole time, waiting for moments like this to implement into the market, to build bigger positions. Take a second here and listen.
Right? No, and also you and I learned a new trick, which was that we realized that this was a long duration asset and need to have a longer time horizon than was traditionally macro.
Yeah.
And we both had to learn that trick. You have to learn it. It's hard, but you learn it, and you learn, as you're doing now, is if you've got a long duration, you should be buying in the sell-offs and not selling. And I watch what you do with 1RT versus most VC investors. They're waiting for prices to go to highs.
I know.
Buying because they don't understand the macro. It's crazy.
I know.
Right. So he literally says, they're waiting for price to go to highs before they buy. And instead you should be focused on buying into the sell-offs. Okay. I couldn't agree more. I actually saw the date on this. I had this video saved in my phone. It's from 2023. So I've been focused on this type of strategy and feeding this type of info to you guys for a while, where I created the strategy back in 2023 when I told you guys I was going to start to build a new portfolio. And the strategy was simple. It was buy when the market's down 50 to $100 billion, buy when the crypto fear and greed index is below 50, and buy when the risk sentiment is risk off. It's very simple. Those are the days you should be buying. And so back to the DeFi spectrum. We've had a lot of people come out and say, oh, DeFi is not what it is, da 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 da. Da. I'm not going to put, pointers on who it is that specifically said this because they deleted their comment. So I'm just not going to get into all that. Maybe it's because he wanted to avoid drama. I'm hoping that that's exactly what it was. Maybe he didn't want the smoke. But I want to really go over this for you guys because in this community, not only do you have access to these institutional grade technical analysis tools, but you also have access to institutional grade research, right? What our research team has put out is phenomenal education. If you just, take the time, read the documents, download a application like this one. It's called, hold on, give me a second. It's called Chat PDF, right? Takes and requires a little subscription, but cancel your Netflix subscription, cancel your Disney subscription, and then you can subscribe to this because it's an educational tool. You can plug in any PDF that you want into this chatbot and ask it questions. And so what I do is I sit here for, at least an hour or two per day, depending on my schedule, and I'll read these PDFs with AI. So I'll take them. If you go over to the research section and you just go to, whatever section you see fit, crypto, AI agents, whatever. I particularly focus on crypto, stablecoins, and DeFi. Well, in these sections, there's documents, right? You can download them, you can drop them into Chat PDF, and you can literally have a conversation with AI about everything in the document and teach yourself. And this is one of the documents that I came across in regards to this very ignorant comment where an individual, because I was talking about yield strategies in DeFi, responded back and said, if you're staking crypto thinking it's passive income, think again. Inflation is eroding your yield, you're paying taxes on rewards, and your dollar denominated returns are shrinking, especially if they yield out or if the yield paces out the inflation and you're taking your rewards and looping them into more yielding positions that are not dollar denominated, instead are assets that appreciate against the dollar depression. Da, 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 da. So I was just trying to combat this and show you guys documented proof, right? This is from a major university, University of Zurich in Switzerland, University of Trieste in Italy, University of Zurich, Switzerland, all these individual representatives from this university. And look at what they say here, right? It specifically says in this document, liquid staking introduces a novel concept in the realm of digital assets, one that lacks a direct real-world comparison. In effect, it allows money to multiply within users' digital wallets, a phenomenon largely absent from traditional financial systems. So it's telling you guys that this does not exist in TradFi. Roll over to DeFi, and it does. LSTs can be viewed, or liquid stake tokens can be viewed as a debt instrument. The stake token resembles the principle of a bond. The staking yield corresponds to interest payments, and the eventual return of stake tokens parallel principal repayment. This perspective aligns with the role as an inflation-resistant store of value. Right? So the individual that said this comment was just simply trying to say that earning yield, pretty much in a nutshell, is stupid. When in reality, the institutions, the universities are teaching their people, they're teaching students right now about this because it is going to be the future. And so the best net option for most people, given the most recent market volatility that we've seen, was just to hold tight, not touch shit, and earn yield on it, on the shit that they're not touching over the next however many days this takes to plan out, whether it's a week, whether it's a month, whether it's whatever. Because again, when you touch your investments, if you're not an active trader who can manage investments like that successfully, the most likelihood is that you're probably going to fumble the ball and lose money, right? So that's my spiel on that. Okay. Again, I'm not encouraging you guys to go out and DeFi. I'm just here to show you all that there are strategies that exist out there that not a lot of people talk about because I think they're scared of them. They're scared of these new technologies and to truly understand them and incorporate them in their life to make success out of them. Don't be that type of person. Be an open-minded person that will go through, read these documents. There was even a document that Break Free from the Matrix posted the other day from Galaxy Digital, and it's a whole entire 100 and I think 12-page document that goes over 18 different DeFi strategies from an institutional perspective. I read that whole entire freaking thing, and it's so mind-blowing, I'm going to have to go back and read it again because it's exactly what the banks are going to do with their money. Verbatim, 18 different strategies that banks are going to be able to use in DeFi, right? And it's exactly what we're already doing, just on an institutional level with much more capital, right? On much more, institutional wrapped platforms, okay? Moving on. ending out this Zoom call, I'm done ranting to you guys. I feel like I've come across enough today. Let's take a look real fast at the economic landscape moving forward this upcoming week. Let's just briefly prepare for that mentally. We're not going to go thoroughly into this. I will leave that open for tomorrow's Zoom call so we have some time to just kind of refresh. This upcoming week, on the scheduled data front, we have a whole multitude of scattered Fed speakers starting tomorrow, Monday the 13th. All throughout the week, we'll be attentive to that. The data is saying that Fed Chair Powell is set to speak, but I'm pretty sure he is just introducing or kicking off an event. So just like he did this past week where he just came in and he had like a 2-minute speech, I'm pretty sure it's going to be similar to that exact same thing that happened last week. So albeit this does seem like a red folder, I don't think it's going to have much of an impact unless he were to say something that the market perceives as changing the directional tone of the overall monetary policy trajectory from the Fed. So other than that, I don't think that this is going to be anything of key importance as I'm pretty sure from what I saw, I'll find it here in just a second. He's just introducing something. Yeah, it says right here, Chair Powell, who will address the National Association for Business Economics at the annual meeting. So it says he will address, right? So I'm just going to go outright and assume he's probably going to have like a, 2 or 5 minute long speech. If something comes more than that and he actually sits down and gets interviewed or, has conversation about economic policy, you know, then obviously, of course, that changes. All right. That's something that we'll be mindful of this week. We have core PPI, PPI figures, retail sales, but we need to be attentive to this because the government shutdown this week, if it does not come, back online, the government doesn't come back online, this data could be effective. That's why it says right here, tentative, right? There's no data time. There's no time for that. Again, we're kind of in a limbo environment where I haven't been an active day trader in the markets during a government shutdown. So even myself am having a hard time analyzing how the markets could react to this because I've never lived through this in my trading career. Like the last time this happened, it was, 2018, 19 during the government shutdown. And that was when I was just in the process of like getting hands-on, learning about trading and all this stuff, right? So 2020 was when I first became profitable. So the last government shutdown was before that. So I'm living through this with you guys. We'll see how this data comes out, but I'm going to go outright and say, if we were to get this data come out and if it were to push back on rate cuts, that's what we need to be focused on. Is if the data does come out, if we get it and inflation is higher, labor market data is stronger, anything that sours the current sentiment and pushes back on what the market was pricing in, which is rate cuts, that would be bad for risk assets. Inversely, if we get the data, it comes out and it supports rate cuts, weakens the dollar, then obviously, of course, it could flourish back that risk on sentiment. So that's kind of what I'm paying attention to. Another thing that I'm paying aggressive attention to is the updates around the China and US situation. So just paying attention to some key dates and just some key rhetoric right now, you're going to see a lot of the markets and the retail traders tell you that this is going to continue to be bad, but we don't know that yet, right? For example, it says here, the renewed brinksmanship revives fears of a deeper rupture in global trade that could push the two economies towards partial decoupling. Ultimately, the endgame will likely involve some form of negotiated settlement, said Ray Wang, lead semiconductor analyst at the Futurum Group. The economic security and supply chain stakes for both sides are simply too high to sustain the current standoff indefinitely, right? So this is what the retail will not show you, that there is a possibility that they could come to some negotiation, right? I'm not saying that that's guaranteed, but it is possible that this could actually turn into a net positive for risk assets if they start high-fiving each other, if Trump comes out and, see like freaking Mentos Rover just put in the chat what Donald Trump just said. Don't worry about China. It will be fine. Highly respected president, da 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 da, right? We just had a bad moment. So this is exactly what I'm trying to show you guys. And when I read these fundamentals for you all, it says right here, the U.S. side obstinately insists, that's an interesting word, obstinately, I hate that one, insist on its practice. China will be sure to resolutely take corresponding measures to safeguard its legitimate rights and interests. So we don't know if they're going to retaliate. When could we be looking forward to this? Well, it says right here in South Korea from October 31st to November 1st, President Trump is set to meet with Xi Jinping. Okay. So those are key important dates that we have to be mindful of. I put those in the chat for you guys coming up. And then obviously, of course, any rhetoric in between now and then. It says right here too, both sides have left room for de-escalation. I highlighted that right there. Okay. If we see de-escalation in this scenario, we also see dovish Fed speakers this week. We see Jerome Powell come out with a muted tone. He doesn't say anything on the policy at hand. He doesn't come out and say anything about the economic trajectory, and the markets continue to price in rate cuts. On top of, if we get data this week that supports rate cuts, then we're probably going to see the bull run back on full effect. Okay. And then inversely, if we see tariffs, headlines deteriorate, we see higher inflation, we see more uncertainty feeding safe haven demand because of the government shutdown and the lack of data. Any of those things, obviously, of course, could weigh on sentiment. Another thing for you futures investors and traders out there, okay? What we do have this week, it says next week's mark will turn their attention to the start of the U.S. earnings season, with major banks including Citigroup, Goldman Sachs, JP Morgan, Chase, Wells Fargo, Bank of America, all these banks, right? All these large organizations coming out with earnings reports. That's going to be of key importance, okay? Reason being is because if we look back at historical data during weeks of earnings reports from large companies, we usually see a lot more volume and volatility in risk asset markets, as most risk assets are heavily correlated with earnings reports in terms of volume and volatility, where investors make a lot of their investment decisions based off of the future trajectory that they think a business is going to return on, da 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 da. Okay. So if we look at the dates on the dates for that, just to give you guys an insight, here's the earnings calendar from NASDAQ. You can see we have earnings reports Monday all the way pretty much through Thursday. All right. Earnings reports that I'll be paying attention to are like JP Morgan, Wells Fargo, the big ones, Citigroup, BlackRock. Okay. Any high-end tech stock companies, AI related companies. You're looking at the big ones like Walmart, type things, Netflix, if there ever are earnings reports for those types of organizations. But just to give you guys insights on the volatility that we could see this week because of data. All right. So that's going to be Monday through Thursday. Mind you, tomorrow is a holiday. Just to read this last thing for you guys, it says, as the US government shutdown enters its third week, it's likely that the release of economic data will remain delayed. So we will be mindful of that, including reports on CPI, PPI, retail sales, housing starts, building permits, and import and export prices. Still, traders will receive several updates from other institutions, such as industrial production, the NHAB Housing Market Index, the Philadelphia Fed New York Fed Manufacturing Surveys, the NFIB Small Business Optimism Index, which will be important. Meanwhile, the earnings season will also kick off, like I mentioned, with major banks including Citigroup, Wells Fargo, Morgan Stanley, set to report their results. Other key companies releasing quarterly updates include BlackRock, Johnson & Johnson, these are important ones, American Express, Abbott Laboratories, Progressive is a big one, Charles Schwab, and then also several Federal Reserve officials are also scheduled to speak. So pretty much everything I just covered, okay? Outside of that, attention will center on the trade figures, which are expected to offer insight into how shifting global trade policies are impacting activity ahead of the anticipated Trump and Xi talks later on this month, which we already went over dates for that come in the 31st through the 1st of November. Okay, 31st of October through the 1st of November. Okay, so tomorrow we'll get into a little bit more details on the upcoming week ahead. We'll do a little bit of a projection, if then scenarios like we usually do, like we've done in our past Zoom calls, typing out these lists as a community so we understand the environment. Outside of that, though, that's all that I have for you guys. I know that this was a lengthy one, and you guys are like, shut the fuck up, Cypress. Jeez Louise, you talk too much. But I had to get it off my chest. The energy has been insane, and I needed to refocus you guys because, man, I can't stress enough. We are in a community where when I see you guys share things, I'm like, why do you even allow that stuff on your feed, right? You know those little buttons on your feed on YouTube? You got like the 3 buttons and it says, not interested in this post. Start doing that, guys, on your feed right now. If you see that your feed is feeding you that shit, you can change it. You can change your feed by ignoring the post, saying not interested, blocking those channels, okay? It would behoove you guys to do that, to lock in, to spend more time in the educational sections, to start asking questions, to start picking institutional scalper's brain, sending screenshots of price action and drilling him with questions in his chat, right? learn. I cannot stress enough. Learn, 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 accumulate the information, and let's stay sharp out there, okay? So blessings to you guys. That's all that I have for you all. I'll leave the flow open for like 5 minutes, but it's Sunday, so I'm got to get ready to get my daughters. So, but yeah, appreciate you guys for locking in with me. Let's continue to just lift our heads up and pay attention to education and how we're going to strategically move in these ever evolving markets and not be so fixated on the doom and gloom that just took place and instead view it as a learning lesson, an opportunity, and just a universal exposure to these markets on how we're going to move forward. All right. So I'll leave the
Did you
floor open if you
see
guys have anything.
did you see,
Thank you,
bro, that
Cypress.
video of that Bitwise manager, investment manager, saying how what just transpired yesterday was pretty much kind of like an overreaction, a healthy overreaction from what we've seen in April too as well.
Bro, I think it was such a healthy overreaction because if you think about it, like events like that, we have to understand that once they're behind us, if the market can recover from shit like that, it screams maturity. Like think about it. We need shit like this to happen because guess what, guys? We're still in a phase where the decentralized platforms that we're on, the DEXs that we're operating on, the protocols that we're using, this is all still just a fucking test, y'all. So when we can see wallets survive, when we can see projects survive, we're in the era of figuring out what's going to survive.